U.S. Treasuries took that.
Listen up, Rebels. Rebel Leader here, and today I'm going to be going over what to look for when you pick stocks. Now, the number one thing to look for is the CEO of the company. This is the man that is in charge of executing and leading the brand's entire vision into the future. And now you're going to want to watch the CEO interviews, look at their resume and history, and also just understand what their goal is for the company. For example, one of the most popular CEOs is Elon Musk. Simply put, do you trust Elon Musk to take electric vehicles into the future? And also for Elon Musk, take humans and colonize Mars. Bunched in with the CEO, you want to take a look at the entire management team, the C-suite of the company, chief financial officer, chief marketing officer. You should get to know these people because these are the guys running the company. Now, branching down from management, you kind of also want to look at the employees. Just get a general sense of what the employees do, how big of a size the company is. And it's even helpful to look at some of the positions and what the employees are actually doing, their job titles or job descriptions. That always helps you kind of understand what the company actually does on a day-to-day basis. The number two thing to look for is the industry they are in. You're going to want to take a look at the competition. Who are the main competitors? And also, is there room for growth into the future? Will this company keep growing for years into the future? A good example of this is one of my favorite companies, Revolve. And they are in the fashion industry where big retailers like Macy's and JCPenney, the brick and mortar retailers, they're dying down. What's coming up are these online e-commerce players. So even though the fashion and brick and mortar industry is dying down, I believe that Revolve sells plenty of room for growth years into the future. Once you understand the growth of an industry and its main competitors, that's how you narrow down to one company that you choose to invest in. Now, the third thing you're going to want to look at, the company's fundamentals. And by fundamentals, I mean you're going to want to go into the company's balance sheet, you're going to want to see their quarterly earnings report, and you're also going to want to see their past stock performance. Now, these are the very basic levels of research you should be doing before you enter a company. Now, these reports are actually made by the company in compliance with a law to show regular people how their business is doing. So don't be scared when you're first looking at a company's balance sheet if you don't actually know what you're looking for. You can kind of start by just looking at the line items and kind of going down the list between assets, liabilities. And the main things you're looking for, again, are revenue. Is this company making money as a net profit from quarter to quarter performance? And the more you look at it, the more you'll kind of understand, you'll see patterns, and it's made for regular people to read. Now, for the quarterly earnings report, this is at the end of every fiscal quarter. And I'm talking about it at the end of March, June, September, December. Generally, that's when you can expect quarterly earnings to be reported. Different companies have different timelines, but they happen 4 times a year. And anybody can listen in on these calls. They usually happen early in the morning at 8 a.m. or right after the market closes. And the CEO is usually on these calls along with the rest of the management team. And they kind of just recap for you past quarter performance, going through their earnings report, which is available on their website. But also they give forward guidance where they see the company going into the future quarter and also into the future year. And at the end of every call, you can actually ask questions to the management team. But again, if it's your first few times, you can just sit back and listen to what the Wall Street analysts are asking the management team. Now, the reason you're going to want to take a look at the past stock performance is because you want to see, is this a cyclical company? Has this company recently taken a nosedive? Where was it valued when it initially came out? All these are kind of important in determining if it's a good buying opportunity. I usually just do a simple Google search, looking at the company's name, ticker symbol, and stock price. And you can see the entire history of that company's stock price from when it first came on the market. Now, if the company is an IPO or just recently IPO'd, you can actually look at what it was initially valued at by Wall Street analysts before it even reached the market. And the last thing, and probably the most important thing when choosing a stock to look for, is really a question you have to ask yourself is, do you believe in the brand's vision? This is important because you don't need to check the news every day, and you don't have to worry about if a stock dips or goes up because you're in it for the long term. For example, if you believe this stock will 10x or has room for growth over the next 5 to 10 years, you don't really care if it dips for a few months or goes up for a few months because you're thinking down the line with a greater vision. For example, I first bought in Revolve stock when it was at $16. It then dropped to $8 in March of 2020, and I bought even more. And then it went back to $16 and I bought even more. It didn't really matter to me because I thought this was gonna be a $100 stock. It is actually now sitting at around the $30 or $40 range. And I'm still not gonna sell because I think it has a lot more room for growth. I like the company and I just believe in the brand vision. This is also important because my friends ask me, how do I handle dips in the stock market? One, I'm busy doing other things, so I'm not checking the stock market every minute. Two, I just really don't care. When I enter a stock position, I'm not entering it to just sell out immediately or if things go bad. That's why all the work and all the research on your part should be done before you enter a stock. And then you can just sit back, relax, and see your gains just coming through the years. So stay frosty, Rebels. Rebel Leader over and out.